Hey guys, Czar here. Good morning to you. Hope all is well. It is Tuesday after a long weekend, 9:31. Call it almost 9:32. Watching the market open up here, regular trading hours, of course. This is the opening range, 1 minute open range formed. That pink line there on the top and the bottom. Here are the three sisters, the NASDAQ, S&P, and Dow. Hope your day's off to a good start. Be watching this thing, see if we can get a trade here this morning, or maybe this afternoon, who knows. I'm not going to try to actively trade, be watching to see what the market provides us, and if we get an optimal setup, maybe flip that coin and call heads. We'll see. Right now we're getting a mixed bag, dropping down on the Dow and rallying a little bit here, at least trying to, on the NASDAQ. I'll be cutting out dead air, sideways grinding action, non-teaching moments, things like that, to keep this video nice and tight. And watching the three sisters, you see we're basically inside or just inside of the opening range here on all three, 1, 2, and almost back in the open range on the Dow. NASDAQ trying to go higher here. This is the 1 minute chart, by the way, or grid, I should say. NASDAQ, S&P, and Dow. The three sisters. We are trading above yesterday's low. Yesterday being Friday, as a matter of fact, since yesterday was a holiday. Although futures contracts show price action in a very strange way. They will show the daily, they'll show the lower time frame price action, but they won't show the prior day. Let me give you an example. Here's today's Tuesday. You'll see the date at the bottom there, Tuesday, and then the prior candle is Friday. But on the 30-minute chart, he showed this to you here. This is showing Monday. You see that there? This is Monday's price action, a truncated day. So that's the way it's typically handled on the futures exchange. Sell stop order, guys, right there. Sell stop order. I'll fix these markers in a moment. The stop is above the open range. Here we go. Do some fancy footwork here. Here we go. Patience now. Sell stop order right there. And I'm in, guys. And I'm in. I'm triggered in. Bear with me for one moment. There we go. So there's the actual entry. Right there. Stop just above the open range. Short the S&P. Watching the three sisters as always for confirmation, at least for agreement, and doesn't mean they all have to be doing the same thing, but they need to lead to the bolstering of the case. And let me show this to you. So NASDAQ now back into the open range, having attempted to rally higher. S&P, of course, broke down, and this is where I entered right here. And the Dow, of course, supporting the bearish case here, trading below prior day's low. We are approaching it on the S&P. Not there yet. We'll see where we go from here. I'll put you on pause, guys. I'm going to bring you back. We'll talk more about this entry and the mindset behind the trade here. Be right back. And target 1 has been hit, so the 1R all-or-nothing trader has left the game with full profitability, and of course the 2R move stop to break even at 1R has now moved their stop to break even because we hit 1R. And so they will either get a 2R or a break even and nothing in between, because their 2R move stop to break even at 1R, and that's where they will sit. Now, of course, the 1.5R and the 2R all-or-nothing trader is going to wait around here to see if their targets can be hit as well. But the primary target of 1R, as is the primary for all of these model trades, has been hit with full profitability. This, guys, is a trend continuation trade and a momentum play out of the open range. You can see that we have a bearish candle on the daily chart, bullish moving average configuration, but the 9 period has been rounding over, as you can see. Blue color candle for the entire New York session. You can see even here at the top, this was still a blue body, as a bearish body on the daily. We move down to the 30, we have a bearish configuration on the moving averages, 9 below the 21, pulling down, squeezing back up, pulling down, squeezing up, rounding over with all this kind of mess, if you like, before the regular trading hours. A quick pop to the upside on the open, created the open range, top of the open range, bottom of the open range. This is a 1 minute open range, by the way. A breakdown below, and then moving back into the open range to make a rally attempt here on this bullish EMA configuration, but failing to make a new high, falling out of the open range, breaking down below, and there's the entry right there. Mechanical order entry right below the prior pivot, and rounding and crossing EMAs. And now we sit and wait to see what happens next. And target 2 has been hit, so the 1.5R all or nothing trader has left the game with full profitability as well. Let's see if we can nail this 2R as well and start the week off, shortened week, off with a nice 2R winner. See if we can do this. And there it is, guys. Came all the way back to the initial stop loss after hitting 1.5R. And so the 1R, 1.5R traders are both fully profitable. The 2R move stop to break even, of course, was stopped out actually way back here at break even. See if I can show you. Yeah, there it is behind that little sign there, as you can see. And then the only model that took a 1R charge, of course, is the 2R all or nothing trader, because they're looking for 2R or nothing, and the nothing, of course, is a 1R charge. So a very good way to start the shortened week here on Tuesday, January 16th. Thank you for being here, guys. I think I explained the trade fully a little bit earlier, and hopefully we'll see you again a little bit later on today. Who knows? Have an amazing afternoon, guys. We'll talk soon. Take care.